What is up, Eagle investors? I hope all of you are having a great long weekend. Happy Easter to everyone who celebrates it. We've had a great week so far in terms of the market, and we saw this SPY hit 400. So that's great to see. We're seeing the market start to rebound, and we're also seeing a lot of key economic data points that are pointing to a dramatic recovery, especially within the United States. So good things are on the horizon, so keep an eye for that as well. So over the past month, I just wanted to go over some of the things that I've seen in the news environment, and I also wanted to go over some of the swing plays, which I think have great opportunity for the next 2 to 3 months and longer term as well. So going into the small caps versus large caps, we've actually seen over the past month, we've seen the S&P 500 actually outperform small caps, and I think that's mainly due to the fact that we've been seeing the US 10-year Treasury start to stabilize around that 1.6 to 1.7 range, which is giving tech that opportunity to outperform right here. And we're also seeing some selling. We saw some selling pressure over the past few weeks for small caps overall, and I think that we'll see as the economy continues to rebound and we get those strong job numbers as well as great PMI numbers due to the vaccine rollout as well as increased fiscal and monetary stimulus, we can see the markets continue to rebound. So keep an eye out for that. For the month, the S&P 500 is up 3.15%, and then the Russell 2000 is down 0.84%, but for on the 3-month scale, the Russell 2000 is still outperforming the S&P 500. Russell 2000 is outperforming it by approximately 5%, approximately 7%. So keep an eye out for that. I think that especially as we see the economy start to reopen, a lot of these plays within the Russell 2000 will continue to rebound. In particular, I'm watching the hospitality industry as well as the leisure space as well. So those are two spaces that I see rebounding, as well as airlines and any other industries that were hit hard as a result of COVID. Now, we saw great U.S. non-farm payrolls come out today, and this was blowout numbers. 916,000 jobs were added in March, and this is great news. So because it's showing the economy is starting to rebound. We're starting to see a lot more job gains overall, especially within the leisure and hospitality, as well as in the education space, along with construction. So it's showing that the economy is starting to rebound. The International Monetary Fund themselves came out and said, in terms of a projected number for GDP growth being from 5 to 6%, I believe it was 5.5% for GDP growth next year. So we're seeing the economy start to open up, and we could see large growth as a result of the stimulus as well as the vaccine rollout. We can see that return to normal. So that's something that I'm personally betting on within the markets, and something that I think will be very important to watch as well. One thing that might deter investors, even though we're seeing this rapid growth, we could see a rise in inflation expectations. And if we see that rise in inflation expectations, we could potentially see the Federal Reserve come in and taper some of their programs. I personally don't expect the Federal Reserve to come out and say they'll taper it, but you'll see the reflection within the US 10-year once we see those data points continue to move higher. So that's something to keep in mind in the back of your head while we see these numbers continue to improve. Now, in terms of the US 10-year, like I mentioned before, we saw the US 10-year start to stabilize for the past few weeks, and this has helped tech a lot. And it's also made it so some of the value plays have been underperforming as well. So I personally think that many of these value plays that were hurt will start to rebound, and we'll start to see that rotation from tech to value potentially, or that outperformance of value versus tech after the run over the past few weeks. Now, in terms of crude oil prices, we actually saw crude oil come down, and this was primarily due to extensive measures across that weren't in the United States. So, for example, within Europe, we're seeing slow vaccine rollouts, and there are reports saying that it might take Europe much longer to recover versus other countries just because of that slower vaccine rollout, and they're still seeing a rise in COVID cases in other regions as well. So that's something to keep in mind. And within Asia right now, we're seeing places like India see a rise in COVID cases. So that's hurting oil prices temporarily, but it's something to definitely watch for. I know with the Suez Canal having that being shut down for a while, we did see a rise in a short-term rise in inflationary pressures for key products. So that's something to keep in mind. I know a lot of supply chains were impacted as a result of that. So we did see a temporary rise in prices in specific commodities as well as specific resources, especially within places like the semiconductor space. Now, something that I've been watching is the rise in cryptos overall. We're seeing a lot of new instances of how blockchain technology is being used, especially recently. And we're also seeing institutions start to come into the hype as well. And that's helped push up cryptos overall. Bitcoin and Ethereum have been pushing higher, so it's just a trend that I'm keeping an eye on. I personally am invested in Bitcoin and crypto, but I'm keeping a smaller portion invested, just because I believe that once we see those real asset inflationary pressures continue to build up, we're seeing a stronger economy. People are going to put their money into things that they believe will see an increase in value. And I think cryptos will be able to rise as a result of that. And we're seeing the technology be used much more, along with more institutional support. So that could help rise the prices of crypto. Now, before I go into the infrastructure plan that Biden laid out, I wanted to go over some specific plays which I think have opportunity. I'll share my screen. So I'm looking at 4 specific plays which I think are great swing opportunities. I personally think that these are holds for the next 2 to 3 months. We'll see a dramatic rise, and then also as longer term holds, I think that they're great plays as well. One of my first plays is Wynn Resorts. Wynn Resorts, I believe right now, is at a bottom. As you can see right here, we're seeing support at that 126 level, and it's been able to 126 to 128 level. So we're seeing support at that level, and I think we could see a significant push upwards, especially as we're seeing the economy start to rebound, and I believe there will be more demand within the hospitality space. Like I mentioned before, we're seeing a dramatic rise in job numbers within this space, and I think Wynn Resorts is one of those names that will be able to take advantage of that. Another name I like is Las Vegas Sands. Las Vegas Sands is in a similar boat with Wynn Resorts, and I believe that we could see a rise from there. It's similar in terms of just recently bouncing off support as well, so I think we can see a dramatic increase. And 2 other plays are within the cruise line industry. I think Royal Caribbean, which has been hit recently, can see that rebound, as well as CCL. Carnival Corporation. So I believe those 2 names can see a rebound. I personally like Wynn Resorts and Las Vegas Sands more than the cruise lines, but I think the cruise lines will rebound as well. So keep an eye out for potential alerts within the Discord server as well. I think these are 4 names to keep at least keep on your watch list. Now, to wrap up today's video, I just wanted to go over the American Jobs Plan that Biden's administration rolled out. Essentially, they're focusing on putting more money into U.S. infrastructure, potentially helping companies like US Steel, as well as looking into a more sustainable approach as well. So looking into the electric vehicle space, there could be some funds and subsidies that go towards that space. So it's something to keep an eye out for. We're seeing a potential $2.2 trillion bill come through Congress. And main thing is to note is it's going to be paid through from taxes. So we could see a higher corporate tax rate. There are discussions of increasing the U.S. Corporate tax rate from 21 to 28%, and we could also see changes in terms of how the tax bill is being presented moving forward if this bill is able to go through, which with the Democratic majority, we could see that bill come through. I know that there's the 50-50 within the Senate, but the Democrats have the tiebreaker. So this is something to definitely keep in mind. We could see a dramatic change in the U.S. tax bill, but we could see a dramatic influx of capital within the infrastructure space. So something to definitely keep in mind. If you have the chance, I highly recommend looking through the American Jobs Plan when you get the chance. It's it's something to keep an eye out for, and it can have dramatic impact on the economy over the next few years as well. Thank you so much for listening to today's market recap episode. Take a look at some of the swing plays, and feel free to let me know if you have any feedback or any other specific plays that you're looking as well within the Discord server or within the comments below.